World economies and industries will likely be different from here. So how will that look with respect to digital assets? We've got several experts on the stream to talk about digital asset regulation in light of the current situation, market adaptation regarding the use for digital assets post-COVID-19, and institutional adoption in the present context. This event is the first of a two-part free webinar brought to you in joint collaboration between prime brokerage Bequant, market data and index provider CryptoCompare, and media outlet CoinTelegraph. Be sure to post your questions in the chat as we'll be monitoring them throughout the stream. Moderating the panel is Nisa Amoils. Nisa is a partner at Grasshopper Capital, investing in fintech and blockchain. She was named as one of Business Insider's Women VCs to Watch, one of the top 100 women in fintech, and one of the top 50 global blockchain thinkers. She's a former securities lawyer, host of the CoinScrum Crypto Show, and a Forbes contributor. Nisa, I'll hand things over to you.
Thanks, BJ, and thank you to all of our sponsors. Welcome, everybody. I want to introduce the panelists. Hanna Halaburda is an NYU Stern School of Business Associate Professor of Technology, Operations, and Statistics. She was previously a professor at Harvard Business School and a senior economist at the Bank of Canada, where she was working on crypto and central bank digital currencies. In 2015, she published the first book on economics of crypto, Beyond Bitcoin. Massimo Buonomo is a UN global expert in blockchain and crypto, focusing on blockchain solutions to COVID-19 problems for governments and companies. He was previously a university professor of international finance, and before that, a senior European bank analyst in London. And Dan Simmerman is an investor and technical product manager and head of financial relations at the IOTA Foundation. Welcome, everybody. Let's start off with talking about market adoption. In your view, how has the market changed post-COVID-19 for digital assets? Hanna, why don't we start with you?
Yeah, sure, thank you. It's a pleasure to be here. So what we have learned during the COVID disruption is that companies who thought that they are fully digitized or fully automated, we learned that they are not as digitized as they thought and not as automated as they thought. Once we needed to work from home and there was all the disruption, there were significant delays because it turned out that at some point in this supposedly fully automated process, we needed a human to press a button. So it is clear that we are going to need, or it's more clear than it was before, that we are going to need more digitization and more automation. And also digitization is needed if we have long distance interaction, but we cannot pass pieces of papers to each other. With that, we will need to do even more digitization than before. And it is true for money, and it is true for any other pieces of information or also assets. What the crisis also revealed is that we need more and quicker collaboration. So with that, people were on top of that, people were experimenting with new technologies. A lot of people who have never used Zoom before, now we're basically all on Zoom all the time. Therefore, people and companies are more open to new technologies than they were before COVID. So on one hand, there is this willingness to experiment, willingness to adopt more and to learn about new technologies. And there is a more visible need for those technologies than was before. So as I mentioned, digitization, automation, and collaboration is exactly the place where we are going to need smart contracts and blockchain. I'm not saying those are the only solutions that are going to help us with that, but this is one set of solutions that can play a big difference. So I think that we are ready for more challenge and for more adoption of blockchain technologies.
Massimo, what about you?
Well, I think digitization is certainly one of the most important issues at stake right now. And I've been focusing on central bank digital currencies because those are the hottest topic right now. And there are two models that I would tend to mention. First of all is the two-tier model where you have digital money to be transferred to intermediaries, mostly banks, to a single person. And the model is to be adopted in China pretty soon. It's already being adopted these days. And it's being proposed in the United States and in all the other countries. The issue is this is really disrupting because, in my opinion, banks are not much in favor of the introduction of a digital currency because they would suffer the most if the one-tier system is adopted in the longer term. And I'm going to come to that in a minute. However, the companies that are worse off because of the introduction of the digital currency will be the likes of Visa and MasterCard, because the processing of transactions in the future will not need credit cards, but only digital currency wallets. So in fact, in the United States, for instance, I've been speaking to the man behind this project, the Digital Dollar Project, which is a partnership between the Digital Dollar Foundation and Accenture to advance exploration of a digital dollar. And here you have a two-tier model where a digital dollar will be a tokenized form of the US dollar. A digital dollar will operate alongside existing fiat currencies and commercial bank money. And the digital dollar will be distributed through the existing two-tier architecture of commercial banks and regulated intermediaries. This is an issue, two-tier model that is being used in China as well. But I think the most disruptive model is the one-tier model that is being envisaged right now. What is it? It's a model where the digital money is going to be transferred directly from the central bank via the social security system to a single person. The social security system really right now, as you know, holds all the updated information of the people. Because of the COVID-19, the money transfer to be done in the United States and also in Europe to the people who need them mostly, who are the unemployed people, could be done directly via digital currency transfer from the government via the social system to them. So that means that the social security system might work in the future as a sort of central bank, giving the money to the people who need the most. And they can have it right away, like COVID-19 has spurred the introduction of these measures. There are many proposals, even in New York City, there has been a proposal to install one sort of one-tier model. And that payments via the blockchain allow the money to go fast to the people according to their updated information. So that would be very effective.
Yes, and in fact, it was considered in the US stimulus bill, although it didn't go through. And then the Digital Dollar Foundation released their white paper a few days ago.
Yeah, I spoke to Giancarlo last week about that because it came out on Friday. And he told me about exactly that. He was kind of saying that the Digital Dollar Foundation is pushing for this model and is not in contradiction with the dollar and the banking system. But if you look forward, you see that who is going to suffer the most are the credit card processing companies and the banks. Why is that? Because think about it. In the current interest rate environment, the only advantage of having a bank account is that it enables digital payments because of no interest remuneration. Now, many costs related to having a bank account, especially for every single transaction done, and also lower security because of breaches from hackers. And in addition to that, you have fees to be paid for electronic transactions using credit cards. Now, the use of digital currency eliminates the need of a bank account. All you need is a digital wallet, which allows you to hold digital money and makes you pay the bills using the mobile phone without using the credit card. No fees to be paid to credit card processing companies, no fees to be paid to banks for bank money transfer or holding a bank account. Why do you need a bank account for? That's why the digital currency has been so slow to be implemented in Europe and in United States, while in China, it hasn't been the case because there is a centralized system, and we're going to go to that point in a minute.
Yeah, so interestingly, MasterCard and Visa filed the most blockchain patents in the space, but we'll get to that. Dan, what are your views?
Yeah, first, I want to say hello. Thank you for inviting me and for everyone being here today. I'm from the IOTA Foundation. We're a nonprofit that has our own native digital asset and this distributed technology that we're really supporting real world use cases. So it's kind of the lens that I like to look through this space. I think that the COVID-19 era has really accelerated and put a critical lens onto a lot of the innovations that we've seen for the past couple of years that are happening in this space, right? I think that in the 2008 financial crisis, people saw or had hoped that there would be another way to operate kind of post-crisis. And you know, people started looking, and that's kind of where Bitcoin, the first real like native digital asset, grew out of and kind of was born from. And now we're kind of in a situation where there are many similar characteristics, right? Some people are claiming that, you know, regardless of your kind of political leanings, that a lot of the monetary policy that's being issued, is it right, is it wrong? It's kind of opening up all these conversations. And now in the context of that, all of these digital assets that have been in development for the past couple of years, I think people are starting to look at those a little more critically and going, why aren't we looking at another system? Why aren't we thinking about decentralized technologies? You know, when the stimulus bill, or when the stimulus packages came out, just as you mentioned, there was the question of sending money to individuals. And the digital currency came into the bill for a split second. I think a lot of people in our space thought, why aren't we using blockchain technology? Why aren't we using digital assets? So I think it's really, if nothing else, it's accelerating and making a really good case for why, as a society, we need digital assets. Whether they're centralized or decentralized, I think that's another conversation we can bring up later. But I think it's having people just look at alternative modes of operating. You know, decentralized workplaces, right? Decentralized finance. These are all things that I think we see that alternative. So I think it's actually driving people more into this kind of alternative world of finance and this alternative world of digital assets.
Absolutely. So let's talk about how blockchain technology has been used during the crisis for whether that be tracking or data or insurance processing claims or Massimo, I know that you talk a lot about this. Why don't we start with you?
Yeah, I've been looking at this issue quite in detail. What I would say is that, first of all, the blockchain solutions that for COVID-19 outbreak are mostly four. The number one, tracking medical material supply chain and donation tracking. Then managing medical data. Then third, contact tracing, i.e. the ability to find people who've been in close proximity to an infected individual. And then insurance claims processing. Now, what I tend to say all the time is that these are specialized apps, but there are also ecosystems that are applying to many different aspects at the same time. For instance, we have MedsBlock, which is a joint collaboration between Avantas Technology and Maxero. This is an ecosystem because it's a monitoring, control, and communication ecosystem, an app that provides real-time COVID-19 insights to government agencies. And then in the three phases of the pandemic, MedsBlock helps in, first of all, the response phase, when you have the issue of tracking supply chain for medical drugs, food, and other critical supplies. Then coordinating welfare activities and tracking donations, which is a huge issue, and also managing medical data. Then there is the second phase, which is currently in Europe, the recovery phase, where you have a specialized app that is for issuing e-certificates to citizens about their COVID-19 status, if they request it, because this is a very important issue of consent. So medical professionals can attest a MedsBlock user status whom they have been tested, vaccinated, or even recovered. And then there's a collection of data to enforce smart lockdown strategies, because this is important once there's a lifting of a strict lockdown. And the third phase is the preparation for the next wave of COVID-19, which is an important issue. It's been happening in Asia, for instance, in South Korea and in Japan. And the apps specialized in these ecosystems of medslogs are helping law enforcement and border control authorities, advising media and citizens with authentic information, and improving insurance claims processing. And in this issue, Meslog provides COVID-19 information to government entities within the respect of privacy rules. And there's trackable exchange of data between players for smooth supply chain operations, because donors can see exactly where their funds are going. So there is a minimization of administrative costs through automation, that provides more accountability and public trust, and AI analytics. Then this is the ecosystem that has embraces many issues. And then there are specialized apps that, for instance, we have in Canada, we have a Canadian company called the Vital Hub Corp, which announced in April the first deployment of a blockchain-based coronavirus screening tool. The app is called Docet, and that helps to screen residents for common COVID-19 symptoms. And then you have supply chain tracking, and for supply chain tracking in the US, we have IBM, which is launching the IBM Rapid Supplier Connect Network, which is designed to provide support for supplier identity using blockchain technology. So IBM Network aims to help buyers in the United States and Canadian healthcare and government sectors, including hospitals, state procurement divisions, medical device makers, to find suppliers and services. And then there are several others. In the US, a stunning one was, for instance, Rapid Medical Parts, a company which works on a device with EVS4 that converts CPAP machines that are treating sleep apnea into ventilators for treating COVID-19 patients. That was created in March 2020, and in just 12 days, they were awarded a Department of Defense contract in just 12 days. And then there are some others, but an interesting one is, for instance, the one that is doing contact tracing, and this is a very important issue. And we were talking before, contact tracing, the most important issue is whether the system is centralized or decentralized. Because if it's centralized, we have, let's say that I have a mobile phone, and I meet another guy with a mobile phone. If there's a centralization and I'm infected, he isn't, our mobile phone send a message, for instance, in South Korea, it works like that, to the Ministry of Health. So the Ministry of Health knows that I got in touch with a non-infected person and makes a phone call to the non-infected person saying, you got in touch with the infected person, you need to do the testing. So therefore, the person, and they set up even the appointment to do the testing. So the person gets testing and knows whether he's infected or not. So this is a very efficient system, and it works very well, but it has serious GDPR constraints. General Data Protection Regulation, which is very strict in Europe, and is basically based on consent. So that means that, in fact, the consent is that the data subject has given consent to the processing of his or personal data for one or more specific purposes. Consent is essential. Without consent, you cannot do anything. The other system that is being pushed in the United States by Apple and Google is the decentralized system, where our mobile phone send a message to the cloud, and the cloud, in the cloud, the mobiles, there is a hash that gets in touch with the other person's hash, and then it sends a message to the person saying, you got in touch with the infected person. do you want to do the testing? You might want to do the testing. Nobody knows the information about it. So in this respect, there is a serious issue. The serious issue of consent is already in place because people give approval or not depending on their willingness. And this is the decentralized system, which is much less efficient, but it respects the rules. And the last point that I want to mention is the 60% rule that nobody's talking about in Europe, but it's very important. This system, whether it's centralized or decentralized, works only if the 60% of the population is using a smartphone. So in fact, whenever, for instance, in South Korea worked very well because 95% of the population have got a smartphone, while in Italy, the population that's got a smartphone is only 60%. So if you go below 60%, the system is not going to work, even if everybody's using it. And that's a very important point.
Hanna?
Well, so we have seen an explosion of use of blockchain, and Massimo had brought up a lot of examples. I will just say about a number of solutions that have been in use before, but they were repurposed for COVID-19. So a lot of IBM solutions. So what Massimo have mentioned, IBM Rapid Supplier, this is built on top of IBM's Trust Your Supplier system. And IBM's blockchain solutions also set up MiPasa platform to collect the information about COVID-19 infections and testing and all the information that we would like to have in one place. And this kind of also illustrates the importance that it's not only about bringing information into one place, it's about standardization and having a similar format for all the data so that we can combine them. If the data is in different formats coming from different places, then it may be more difficult to learn and to combine them and to use it in supply chain. And this is why having a common platform is another great functionality of blockchain here. Now, I would actually want to point out that some of the decentralized solutions may not necessarily need blockchain. So, I'm not going to repeat any more of the examples because I think Massimo covered most of them. I think that the Google and Apple and Google solution, which is decentralized, doesn't use the cloud, but it doesn't use the blockchain technology. So I think that we need to be also careful about when we are looking at the blockchain solutions used for COVID-19 purposes, asking how much of it, how the blockchain is used in those solutions, and is it really crucial to have blockchain? I think that especially the decentralization and unification of data is crucial, and this is why IBM MiPasa tracing and MiPasa data collection and the Trust Your Supplier or Rapid Supplier connection solutions are great uses of existing blockchain protocols for to use in situation like COVID.
Okay, so we're seeing a lot of collaboration between big tech companies, and we have a question from the audience about whether if we had more collaboration amongst pure blockchain companies, do we think that there would be more adoption? Dan?
Happy to answer that. I think that's a really loaded question. We could probably spend an hour just talking about that. I think that you kind of have to take a step back and look at many of the traditional blockchain architecture in terms of decentralized blockchains, permissionless blockchains, not the permissioned ones. Most of them cannot really be applied to real world use cases. And there's lots of different reasons. One's the scalability question, right? You can't put a lot of data into a fixed block size, right? But then there's also the question of the usability of the network. And this is something that we at IOTA find constantly. We'll go to a partner or a potential partner, a Fortune 500 company, and they'll tell us, we really like the idea of blockchain, but we don't like the idea that in order just to send a database application or to engage with one, I'm going to have to hold an asset. It might be a security, And every time I want to engage with the blockchain, I have to debit it from this account. And then every time I click a link, it's a fee. So we think sometimes that like the fee-based architecture of these systems supports non-database or non-finance-based applications. But the reality is that it's an incredible barrier. So, you know, one of the things that's kind of really unique about IOTA, not to highlight this too much, but we have this feeless architecture. So there's no fees required when you send a piece of data. And that opens up a lot of use cases. There are a couple other protocols that are testing this out, but no one's really kind of hit it off like we have. And it really enables collaboration with big partners, right? So we've been working with Dell to create this data confidence fabric so that you can actually authenticate data, you know, especially when you're thinking about like COVID-19 or for IoT, that's incredibly important. So our position has always been, we want to work with industry. We want to work with regulators. We think that's incredibly important. Whether they have permission systems or permissionless systems, they're already starting to find the limitations of the systems that they've developed, and they're looking kind of outside of themselves. So I think that's incredibly important. I also think that when you talk about the use cases for these systems, I think Hanna said, you know, not everything needs to be decentralized, more or less, right? Our biggest thing is really around trust with IoT. We think that, you know, many times people look at distributed networks and go, what's the real use case? Like, who's going to be the main user? Is it going to be, I'll usually ask this question kind of as a fake out, and people will say, oh, it's going to be financial users. It's going to be people who are in supply chain. And I usually say, well, we think it's going to be devices, right? There's going to be what, like 100 billion smart devices online in the next like 10, 15 years, something like that. And whatever system ultimately takes the place, whatever distributed ledger system takes the place, is going to have to support IoT devices. They're going to be the primary users of these systems. And you're going to have to create this interoperability, this connective tissue between the human economy and the machine economy. And if you can't do that, then you're not going to ever be able to put your hand across the aisle and bring, I think, real industry and real people in and real enterprise. So I think that's kind of the biggest use case when you talk about critical infrastructure, when you talk about you know, pacemakers, the IoT bread and butter. If you don't have decentralized systems, you could be prone to hacking, right? So we've seen like the Equifax hack. Like, imagine if that happened with your pacemaker company or with like critical water infrastructure. So I think kind of, especially in the world of kind of COVID-19, where we're starting to look at critical infrastructure very carefully and think about how is data going through a data pipeline of devices and people and organizations. I think it's incredibly important, and I think it's one of the biggest use cases that people aren't talking about.
Is there an example of how IOTA was working with different devices during the pandemic or after?
We've been toying around with some stuff. We've been looking, I think we just announced that we've been working with Dentons which is a law firm, to be looking at kind of like this health passport, right? I know that's kind of a thing. And our general take, people in the foundation wouldn't agree with me. I'm a little uneasy about the whole idea, but I think that if it's going to happen, better that it be a decentralized digital identity solution where you own your own data, you control it, and you're responsible for it, rather than a for-profit company or someone that might have, you know, a really robust like surveillance capitalism model. So we've definitely been engaging, and because we're a permissionless system, there are people that are probably picking up our technology and using it that we don't even know about. I think that's kind of what's so exciting about this place. So I'm sure that there are people around the world that are picking up IOTA and engaging and applying it to the COVID-19 issue that we're all facing. But we don't know every single one.
Okay.
So if I can kind of chime in on the issue of large companies and established companies coming together and promoting adoption. I think it is going to increase adoption when we have IBM providing blockchain solutions and we have Google providing blockchain solution. It is going to help adopt blockchain solutions. But I want to kind of point towards certain dynamics that we have seen with other technologies. This is not the first technology that this is happening. Is the technology that starts as technology promoting decentralization and disintermediation actually gives rise to even more intermediation and is used by large companies to their advantage. And I'm I want to state that this is what has happened with internet as well. Internet was supposedly this technology that is going to disintermediate and decentralize. And we see decentralization in many, many aspects, but at the same time, it gave rise to the largest intermediaries that we have ever seen. And it is quite possible that the blockchain technology, the way it is going to be widely adopted with help of the established companies, is going to actually be dominated by and provided by those large companies. Now, we don't know where it's going to lead, and I'm not making any judgment whether it is good or bad. It's probably good for adoption, whether it's bad for some other things. It's up for discussion, but it is contrary to the initial inspiration of Nakamoto, for sure. But I find it very interesting to see where this technology solution in industry is going to get to.
Yeah, go ahead.
If I can, I would just jump in just to mention a point that was touched by Anna, and it's regarding some blockchain-based open data hub, the one that is called the MIPASA. I've been looking at this platform that was created by the enterprise blockchain firm Hasera, IBM blockchain platform, and IBM Cloud. Now, you have great sponsors. You have World Health Organization, IBM, Oracle, Microsoft, other tech companies, government agencies, international health organizations. They are all partnering in the build-up of MIPASA. And MIPASA, in fact, is designed to make it possible to be a verified data hub, synthesize data sources, address their inconsistencies. But that's exactly the point, because I've been looking, my approach is not to talk in general, but just go there and look at how that works. And I was a bit disappointed. I spoke to the top management of MIPAS about it, because the database needs to be improved. What you have there, smart contracts, are not well defined, in the sense that you get the data of each single country, like Czech Republic, Italy, and Brazil, but they are not homogenized. They are all different. So you don't have a clear idea how this database works and the comparisons. And the most important thing, I think, in my opinion right now, is interoperability. So all the flux of data that comes from every different source should be canalized in a way that is rationalized, and the user can see comparable data. That is not happening with MIPASA. They're working on, I've been telling them, but in general, this is the issue with the blockchain and with the alliances between blockchain companies. If there is interoperability, that works. If not, it doesn't.
Just to take that even one step further, what both you and Hanna have said, I think we're starting to see like a standard wars thing play out, right? We're seeing lots of different protocols saying, I'm going to be the standard, I'm going to be the standard. Some of them are actually working with standards bodies. We are, many are not. And I think it has a lot to do with how we're actually framing, like some consider themselves as open source, open standard, open governance models, and others are just for-profit companies that are releasing blockchain solutions. And that's a very, very, very large spectrum, right? So we kind of see two things happening. We see a lot of players in the crypto space or digital asset space that are all coming out, basically creating their own product-sized versions. Some are creating, charging fees for it. Some are doing licensing or not. Many are not. But then you also have for-profit, large multinational companies that are creating their own blockchain solutions and saying, we're going to be the standard for our industry. Come use ours. Now, what's problematic about that is that everyone's trying to do that. And then they're going, well, why would I use your solution if I've got my solution? So I don't think we're anywhere near a point where, at least on the permissioned blockchain side that companies are trying to release within industries, I don't think we're anywhere close to a point that there's going to be a standard, not anytime soon. I think on the permissionless side, we're getting to a point now where certain projects are starting to really bear out, show real world use cases. And I think that's going to slowly, a couple of projects are really going to start to envelop within their certain domains, whether that's IoT or DeFi or the many different domains in the space.
We have another question about central bank digital currencies. How do you address, manage fungibility?
Well,
Anyone?
you want me to answer that? that is a big issue actually. But if you look at the way the adoption has been in with 1-tier or 2-tier model, most of the world governments have adopted a 2-tier model, and they are saying, for instance, China is saying the digital one is going to be exactly the same as the physical one. So in this respect, it's going to be exactly the same as paper money, but it's just in a digital form. They say it can be transferred between users without an account and without a mobile or internet network. And if a user's mobile phone has a wallet, the digital currency can be transferred to another person by placing the two phones in physical contact, which is NFC. And this is used not only of blockchain technology, because current technology would not be able to handle transactions volumes in China. So in fact, this issue of fungibility depends on how the central bank digital currency is actually implemented. As I said, in the 2-tier model, it should be sort of fungible, totally fungible. But if it's a 1-tier model, it could be a different issue.
And Dan, Hanna?
So with CBDs, it is the point is to provide electronic or digital currencies, and it may be digitized paper currency, or it could be a separate system. So basically, typically we would have banknotes and coins, and those are actually two different currencies. We don't think about it that much, but there are two different currencies that are promised to be exchanged on par. But they don't have to be. In many countries, they are issued by different institutions. And there are, so for example, in Canada, banknotes were issued by a non-profit Bank of Canada, and coins were issued by the Mint, which is a for-profit institution. So you can, there are different systems, and those are different currencies. It's just they are promised to be exchanged on par. So we can add one more currency like that in the form of digital currency that could be again exchanged on par. It doesn't have to be digitized US dollar, digitized Canadian dollar. But I think that what we are seeing is that a lot of the digital central bank issued digital currencies are not necessarily issued on blockchain. Like Massimo said, that blockchain cannot really handle that much. And if it would be on blockchain, it would be private blockchain. There needs to be control. So in fact, it's a now forgotten experiment. The first digital central bank issued digital currency was in Ecuador, and it was started, I think, 2016 and terminated in 2018 after 2 years. And it is how it worked. It was a wallet, and there was an issue of adoption. Now China, I think, can do more about adoption of their digital currencies, but generally there is nothing that prevents us from having another form of currency, just as we have digital currencies issued by private banks with backing of central bank assets. So technologically, I think it shouldn't be that difficult. It's a matter of whether central banks want to do it with all the effects that it would have on the banking system and credit card system, for example, that Massimo mentioned before.
And what do you think about China and the DCEP and their initial rush after Libra announced to get it started, but now they're in testing phase? Do you think other countries are falling behind?
I think that there is a very careful consideration by other countries whether this is actually whether central banks need to issue their currency. So I wouldn't say that it's falling behind, but I think that the considerations of why central bank issue currency are different. So when Sweden came up with e-krona, it was for a different reason than Ecuador wanted to issue their own digital currency. And it is for a different reason than Venezuela came up with their government-backed crypto petrol. So depending on what is the issue, and I don't want to, get into the very different initiatives with very different objectives. Some countries may on purpose decide to delay and see how this market plays out and whether we actually need to issue central bank issued digital currencies. Those will have, once issued, they will have very important, profound consequences, and not necessarily only good consequences on the financial system.
So then what are the, sorry.
If I may jump in, because I studied a lot this China case, I think that the issue with China is about world dominance, because you got three main points in the case of China. First of all, you got the Belt and Road Initiative, which is the global development strategy adopted by the Chinese government. It is being implemented in 152 countries in the world. So China is dominating international infrastructure. China is dominating international trade, which means that China overtook the US as the world's largest goods trader in 2014. The country has been the world's largest exporter for a decade. But the third point is about money. So the Chinese export their goods everywhere. They dominate the world, but they have to be paid in dollars. They don't like it, because why should they be the revenues that they get from the international trade be defined by a policy of one of, I don't want to say enemy, but one country in the other part of the world, like the US government, with the definition of the dollar currency. So the Chinese want to solve this problem with the introduction of a digital yuan, which would entail their domination of the world trade and the world payments. And the adoption will be, as I said, they would do that with the CBDC to the consumer-facing firms, and these firms issue that to the public, and the firms are Alipay, WeChat, and so forth. So this is perceived from them to be a horse race in which the leader will get it all, and that's what they want.
So Massimo, can you explain here why wouldn't China be paid right now in yuan without being electronic? So there are two changes in this scheme. One is being paid in yuan instead of being paid in US dollars, and second is being paid electronic. So they have to be together, or they can be implemented separately?
No, they can be implemented separately. They felt the biggest threat coming from Libra. And basically, China wants to control the money supply. That's the biggest issue with digital currency. To maintain control of money supply, the digital currency would replace what in economics would replace M0, but not M2, which would generate credit and impact money monetary policy. But the cost of circulating traditional money, paper money, will be reduced, and also digital assets might be under central bank oversight. But the problem is that that would, from one side, they would prevent potential foreign exchange risks, but they would control where the money goes, and that's what they want most of the times. Of course, they want to contrast Libra, which is becoming a dominant form of digital payment and a channel for money laundering over the social network massive cross-border reach. That's what the Chinese say, although of course it's not entirely the case.
Dan, is IOTA working with Ripple on interoperability to make it interoperable with the human economy, IoT?
Not that I know of. There might be some people in our community that are tinkering to put them together. They certainly live in like different parts of the spectrum in terms of use case. But I think to that point of like the CBDCs real quickly, I think the writing's on the wall that things are becoming digital, right? Whether it's a centralized ledger or whether it's a decentralized ledger. Like the panelists said, there are lots of open questions, right? Like a big question is whether the CBDCs are even exposed to the public, right? If it's public can engage with it, or if they're even just using them in accounts between organizations or institutions. So again, I don't know if we're close to seeing them this year or next year. I think there's still a lot of questions. I also saw some questions about whether this would compete with Bitcoin or whether this would compete with other digital assets. I don't see that happening. I actually think that it could be a great on-ramp because a lot of the same infrastructure that's being used to develop these digital assets are very much, I think they're going to be similar, right? We talk about custody solutions, we talk about different types of insurance, we talk about payment processing applications. So I think that it's actually going to bring a lot of demand and a lot of interest in. And I think what's going to be really important for all of us is to really make that distinction between what a CBDC is, what a digital currency is, what a native digital asset is. These are nuances that make a big difference, right? Because when you're engaging in a fiat currency, whether it's the digital dollar of the future, you're kind of using or buying into that whole framework, depending on which kind of country you are operating in. You know, if you're kind of in this fluid boundary future that we see ourselves in. So I do think that there's going to be a distinction, and I think that there is a lot of promise in CBDCs or even just countries issuing their own digital assets. I'm not like Hanna. I'm not entirely sure that it's going to be on a blockchain. Right, I don't know if there's a lot of incentive for them to put it on a public blockchain. I know a lot of comments are saying we should put it on Ripple because Ripple's like the future. I'm not. Everything that I've seen, like talking with people in the space, is that I don't know if a government would feel super confident about putting into something not only that's a permissionless system, but also has a very for-profit arm to it. I think the kind of balance between for-profit and non-profit is also really important when we think about who's creating this kind of Web 3.0 open governance. And you know, we see a lot of new blockchain companies now that are coming out of Silicon Valley, doing the Silicon Valley model, and because of how they raised capital, a lot of their digital assets are actually being scrutinized by the SEC as maybe being considered securities. So to think that such a system would be one in which a government would want to build a digital asset or a native digital currency on top of, I think is kind of a stretch right now.
Absolutely. So you bring up the next point that I was going to bring up, which is regulation. And pre and post COVID, what changes do you see in regulation?
Me, or should someone else?
Go ahead.
What I think is going to change, I definitely think that there's going to be an appetite more to explore digital assets. I think they just said like Crypto Mom, right, is now spending another year in the government. I forget her name. Is it Hester?
Hester Pierce.
Hester Pierce, that's right. So I do think that as we're pushed more into scenarios where it's more of looking at this tech as a necessity rather as a nice to have, I think it's going to be required that we look at this and start regulating it in different ways, whether that's making a distinction between regulating the digital assets on top and regulating the distributed technology that's underneath. But I think that it's going to be a regional thing, right? I think some regions are going to be way more accepting of digital assets and blockchain technology because they see a use case. I think others are going to see it as threatening for one reason or another. So I don't think we're going to be able to say a one size fits all, regulation's going to improve or regulation's going to be squashed. I really think it's going to be a case by case basis. And if anything, I think that the kind of hyper focus on digital assets in the next 12 to 18 months is only going to exacerbate that.
Massimo?
Yeah, I think that there are some conflicting signals in the US and elsewhere. For instance, if you see that the SEC has been cracking down on stable coins in April 2020, for instance, the New York litigation office has filed 11 lawsuits against Brief Finance, BitNet, Block One, Tron, among others, and SEC alleged violation of security laws in the US. And the violation supposedly came back during the sale of the TR token or the Binance, BMX, and others, which were also charged allegedly due to the illegal token sales. And then you see from the other side, Cryptocurrency Act of 2020 was introduced to the House in the United States end of 2019. Another which is in favor, while the SEC behavior would be against the introduction of the stable coins. And then, for instance, in March 2020, in the United States, you see the SEC proposing amendments to raise funds for blockchain companies And these amendments are very interesting because, for instance, Regulation A+ amendments were intended to offer an exemption for small issuance, providing startups and small firms with an easier way to raise funds from investors. And then you have a two-tier framework for Regulation A offerings. And the Tier 1 issuers may offer and sell up to 20 million of securities over 12 months. And the Tier 2 issuers may offer and sell up to 50 million of securities over 12 months. And that's all for blockchain companies. So you can see that in the United States, there are some signals in favor and against. Why is that? Because, of course, it's all about the control of money supply. Because digital currency, of course, is a sort of centralized blockchain, and therefore it's, the control of money supply is still in the government's hands, while decentralized, like Bitcoin, is not in the hands of government. And now everybody's talking about the issue of the huge increase, I think $2 or $3 trillion issuance of to face the COVID-19 crisis in the United States. And you have Paul Tudor Jones, the founder of Tudor Investment Corporation, who says that the crypto assets can be used as a hedge against upcoming inflation as a result of central bank money printing after COVID-19. And also, he perceives Bitcoins to be a digital gold and safe haven asset. So this is a sort of crypto endorsement that comes from the private sector. But there is also crypto endorsement coming from the United Nations. Because if you see the cryptocurrency fund that was created by the United Nations agency UNICEF in October 2019, that fund collects donation cryptocurrencies and gives them in the same currency to the blockchain companies that it helps. There is no exchange in fiat currency. So the crypto fund works with within another UNICEF venture, the Innovation Fund, which provides funding to blockchain-based companies working in developing countries on social products or services. So this is an endorsement from United Nations. And those conflicting signals, what is behind that? As I said, the companies that are worse off, like credit processing payments and the banks, that will be worse off with digital payments, and the governments which will be worse off with the endorsement of Bitcoin or crypto assets.
In fact, what you saw was, I call the jonesing effect, bigger than the halving effect.
Yeah, exactly.
and the Goldman Sachs reports that you're
But
talking
Goldman is on the other side. That's why they said that. In the investment advisory call to clients, they said that it was not an asset class, it was no cash flow, no dividends used by criminals, but Goldman is the establishment. And also, let's look at that. That is also because Goldman interest is against cryptocurrency in favor of CBDC or fiat currency, because they are, who are their clients? Their clients are using just that. They don't want to give up their power to cryptocurrency firms. That's not.
Yeah, Goldman does have a crypto team though, and they are actively
exactly
looking, so that
as well. Yeah, but that's a conflicting within the firm. I've been working in international investment firms, so I know how it works.
Hanna?
Yeah, so I think it's not only about the control of money supply, but it is about control. So a lot of the regulations that we have around banking and about money transferring is know your customer, anti-money laundering, and you know, we may argue about abuse of those regulations, but there is a good purpose to have those regulations. So the big difference between, I mean, what we see in those conflicting initiatives that Massimo pointed out, and they may be conflicting around among geographies, but also conflicting within one geography, is that there is a big difference for technologies, and the technologies that give control over those assets, and then they can be regulated in a different way, and technologies where by design the assets are not controlled. And then there's a different question of regulation. How are you regulating Bitcoin? Bitcoin has a lot of issues because you cannot comply to, or it's very difficult to comply to anti-money laundering and know your customers, even when you need to identify yourself when you first buy Bitcoin, but you could be a miner, you don't have to identify yourself. So there are a lot of issues. Now, it's a different story than when we are talking about digitization of assets, when we want to have digital assets and we are asking how are we going to digitize assets so that we can represent them and then move them quicker and manipulate them quicker and put them on the supply blockchain. There should be a regulation so that we can trust the information that is getting on the blockchain. And this, I think, is going to go faster because, and it's not only the blockchain, it's maybe digitization of assets for other technologies. And this may actually be prepared by COVID because, like I said, it became visible that some of this digitization of asset has not been happening as far as we thought it is. And again, we can see regulation of those initiatives that are blockchain initiatives, but with a clear head of a project or someone running the project. We can see regulation that would be regulating IBM blockchain, but we cannot really see much regulation regulating, again, Bitcoin, or difficult to see Ethereum because there isn't anyone to regulate. So the approach to regulation will be different, and whether it's going to change because of COVID, I would say that the regulation where we have someone to regulate is going to be more adopted after COVID because we see the need for those technologies.
Yeah.
Okay, just really quickly, we just want to take some audience questions. If there are transaction fees connected to interoperability between digital currencies, would that not cause unnecessary friction?
So my answer is yes. I think it creates friction at a lot of different levels. I think it creates friction at a usability level, right? It's a burden to ask users to pay for transaction fees on a network, whether it's for a database or a finance-based application. I also think it creates a lot of friction at the regulatory level, right? Because there's Bitcoin and there's Ethereum and there's IOTA and a couple others that are like pretty clearly not considered securities, and there's a lot of work around that. But then there are many for-profit companies that are creating digital assets that also have a network that could be considered security. So there's a regulatory question of if you're using the data network for interoperability, but you have to use a digital currency that might be considered a security, that's a big point of friction. And then finally, you have the point of friction for companies that might not feel comfortable engaging. Maybe they don't know how to do the accounting. Maybe they don't know how to do any number of kind of new wave requirements for digital assets that you're kind of putting on them as a burden. So I think it absolutely creates a great deal of friction, and we're seeing that now.
Okay, another question. Do you advise storing crypto on your phones? If not, what measure can you use?
Anyone? I don't advise it. I don't know what everyone thinks.
Okay.
Well, it depends on the broker, I would say, rather than the phone. Of course, you must make sure that don't lose your phone, because otherwise you would lose your money. But there are some security questions that must be addressed before. I think what I always say to my clients, you have to educate yourself before getting into something that you don't know, because otherwise that is very misleading. And that's why, in my opinion, the SEC was very hard on some brokers that were selling, that were issuing some tokens, because the education is the most important issue for the investors. Otherwise, you would tend to violate rules and laws, as Anna rightly said.
All right, well, we are out of time. Thank you all very much. And thank you to our sponsors again.
Thank you.
Thank you.
Awesome. Thanks so much, Nisa, for moderating. That was really great. Thanks everyone for your insights. Thanks so much, Dan and Massimo and Hanna. A big thanks to our sponsors, Bequant, CryptoCompare, and CoinTelegraph. On Twitter, you can find Bequant at Bequant_group. You can find CryptoCompare at CryptoCompare and CoinTelegraph at CoinTelegraph. Remember, this is a two-part series, so be sure to tune in next week for part 2 of the webinar on Thursday, June 11th. Thank you so much, everyone, and we'll see you then.
Thank you.